here with what are we doing? The Smoke Kings
This is
podcast.
the Smoke Kings
Oh,
podcast.
there we go. So check this out. We thought it would be interesting because like when we talked about doing the Smoke Kings podcast, my first inclination was like, well, damn, we're gonna get a lot of search traffic that's not exactly the audience that we're after, right? Like so
Oh,
Jake, Jake,
like
explain
you're a pacifist. To stop it.
exactly. So Jake, tell everybody like kind of how we came up with this name.
It was kind of by accident. You know, he and I were talking, and we are talking about a lot of the myths that are online about this banking concept with policies.
Yep.
And Chris was talking. I said, man, you ain't scared of the smoke. And he was like, yeah. I said, man, I like smoke too. It's like we the Smoke Kings. And then the people that were in the chat were like, Smoke Kings, Smoke Kings. So I said, Chris, let's make it the Smoke Kings. He's like, man, I don't know, man. You know, they're gonna be searching for certain other stuff. I'm like, yeah, we're part of that. We're part of this. We're clearing out all of the smoke and all the BS in this mythical world of finance and business and marketing, so that you all have a better chance of not being taken advantage of. And then also you have people that are clearing out a lot of the myths and what we don't know. We're gonna bring people on the show to be able to tell you.
Amen. There you go. There we go. There we have it. So listen, there's no real format for this show. It's going to be Jake and I having a conversation about what's going on in the world, what we see based on what's happening with conversations we're having with clients and people that we're helping, serving, whatever. Kind of what we see happening in the world. Sometimes we may get a little political. Sometimes we'll be talking about family. Sometimes we'll be talking about the industry. Literally nothing is off limits. And so what I would say is like, hey, anybody that has any questions, comments, whatever, let's make it engaging, let's make it interactive, and let's have some fun. So what do you say?
And maybe one day we'll have enough confidence to do a live call in one day.
Yeah, game like that. That's good. Let's do it. So check it out. So this week, let's get into this. Let's get into the meat and potatoes of it. So two things happened this week, and I'm gonna let you choose where to start. But I had a guy named David McKnight call me. What
about how was your week, bro? How about that we talked, but they want to know like how was our week? What have we done? What are we? You know what, y'all? He's so rude. He's so rude.
All right. How was your week, Jake?
Oh, went out. Just had a great time with the family.
You sold a company.
We're in the middle of. We're in the middle of selling a company. This is something that less than 2% of businesses ever get to do. 10% and less than 2% of African Americans ever build a company and sell something. So we're happy to be a part of that. So I'm lit about that. But other than that, man, I tried something new. That's the most important thing. This is the most important thing. No phones after 6:30.
Ooh, nice.
And bro, when I tell you, it's been like rejuvenating my marriage and rejuvenating like my attentiveness to sit and like just absorb the moment, bro. Yeah. Oh my gosh, bro.
That's big.
Bro, that's probably the best thing ever. And then going to sleep 9:30, 10, waking up, I've literally felt a difference in like everything. And then the worst thing that happened to me this week was I totaled my car.
Oh no.
Yeah, completely totaled it. I mean, every airbag came out. The car was just beat up. I had a green light. I was turning right on my green light, and then a car was coming like fast out of a tunnel, but they was running their lights. So I swerved to miss the car. And I swerved and I tried to correct it, and I hit the concrete slab that's right before you go onto the highway.
Those don't move.
So glory to God, all of the airbags came out, but I didn't hit any of them. Like I was just like stuck.
I was gonna say you don't look like you got any burn or anything going on.
No, nothing. I didn't touch anything. So I'm thankful to God about that. And And yeah, so the police came out, and I don't know, before that happened, the guy, whoever the guy was, because you know you kind of like in this shock. This is my first time ever getting in a wreck, like with me
Oh,
driving. I've never been in a wreck ever. So the guy come, he said, "Hey, are you dead?" I said, "No, I'm good, thank you." And he said, "Okay." Sprinted to his car and took off.
no
So
way.
yeah, I promise you. So that's just kind of that was I had like a great week, just full of like everything. So I'm lit about that. What about you, bro? How was your week?
Oh, just a little thing. No, honestly, the week was great. I've got some
Starting beefs online.
cool things happening with the family, but all things are awesome. I'm actually like recovering. I've been sick, man. I've been like 6 weeks. I got pneumonia. I don't know if you remember, but I got pneumonia like 6 weeks ago. I went to Vegas for an event last week, and like as soon as I landed, like something got kicked up. I ended up being like bedridden for almost like 2 days of my trip. It was
Dude,
horrible.
dude. How you gonna tell me you don't know if I remember you saying that you had pneumonia
I
about to
don't
die?
remember like
What?
I like ghosted people. I like disappeared for like 3 weeks.
Dude, listen, I understand.
Yes, you do.
All right,
So,
so wait. So you had pneumonia,
yeah,
overcoming it, and then I was wondering, could you get a little skinny, your head's getting bigger? So I was
yeah,
trying to figure out,
I know that's what's happening. I know. It's funny. I built this gym, like this CrossFit gym in my garage, and like
how
as soon
have
as I
you
did it, that happened. I get pneumonia. I get sick, and then on New Year's Day, I'm an idiot. I go to my brother-in-law's place, and my brother-in-law is like a competitive dirt bike rider, right? And
Oh
so
my goodness.
I'm like, yeah, man. He's like, yeah, why don't you rip around on the pit bike? And I'm like, oh, sure. It's like this mini dirt bike. And it was raining or whatever. And I start ripping on it. It's like 150 cc's. This thing's like a death machine. I had no idea what I was doing and like what I was getting involved with. And I went around this corner. The wheel got away from me. I went up. I took a jump, like went sideways in the air and came down, and just like the bike shot me off into the ground. I dislocated a rib. I was like in a really rough shape.
Dude, yeah, you did tell me that too. Dude, what?
It's horrible.
All right, so here's the deal. The Smoke Kings were almost just smoke. But
We almost went up in a pile of smoke. Yeah, it was bad. But so hey, I actually, dude, I went, I got some treatments on it last week. I feel my shoulder, my ribs, everything feel good for the first time in like a month. Which is amazing. I'm still feeling pretty sick, but I'm just pushing through it because like it's gonna be what it's gonna be. I'll get better.
Yeah, but you better sit your butt down. Okay.
I know.
Listen, let me tell you something. Listen, none of this matter if you are dead, my man.
I'm not gonna die.
Okay. I know what I'm saying. You're not, but get your stuff together.
I got it. I know.
All right, y'all. Sorry, y'all. Back to the show.
So that happened, and then while I was sick, here's the crazy part. So this is, I guess, a relevant part of the story. I'm laying in bed at the hotel in Vegas, and my phone starts blowing up, and everyone's like, "Yo, do you see this video? You see this podcast? This thing just got released," and everybody's like texting me this link, and it was David McKnight, the guy who wrote The Power of Zero, made a video debunking my stance on IUL, and so. I became pretty popular for about a 12-minute window there in the morning, like when his thing released, because I literally got like 40 text messages in like a 10-minute period. I'm like, what the hell is happening?
Bro, and he made a diss track. He got on YouTube and made a YouTube diss track.
Yeah. So he did that, and he kind of came at me pretty hard. And it was interesting because I had a buddy, I'm not going to name his name, but he goes, Chris, hey, I saw this video, and my first response was like, oh no, poor Chris, like David's after him. Then he goes, wait a minute, Chris is probably happy about this. And then he goes, oh, David McKnight has no idea what he just did to himself.
No, but here's the thing, like you've been picking for someone to take you up on your offer for so long. I just hope, listen, I like a good debate. I like when people have time to make their points, when it's not when it's not personally shot at anyone, like any personal thoughts or opinions, straight facts. I love those type of deals. I don't like when two grown men have, differing opinions that both think that they're facts. And everybody knows that this, even with insurance or investment numbers, anyone can bend numbers to make it look like something different than what it is. So, the facts aren't in the numbers. The facts are in understanding the numbers.
Totally. 100%. And, so there was a couple points that he made in this that really stuck out to me. And, aside from the fact that like he was calling me like a predator and like things like that were just kind of like personal attacks that got me kind of amped up a little bit, and have incentivized me to kind of like, take personal aim at some of his content. And so we'll get there, as I feel better, I'll start making more stuff. But it was interesting. Like honestly, like I watched this video and I was like, oh boy, what are we going to be in for? Whatever. And it was honestly like, to me, like, I don't want to come across as like arrogant or egotistical or anything like that. But I watched it and I was like, man, this is just really bad. It's pathetic. It's a pathetic attempt to make IUL look credible. And the first point that he made, and this is interesting. So I always kind of make this point, and I'll try to make it clean and clear here. I always make this point, and I'm really clear. This is my opinion, okay? But it's my opinion based on conversations with people like actuaries, like the actuaries that I talk to, people that are leading life insurance companies, people that make decisions at the top levels, right? And so, if I cough, by the way, I'm still like, my lungs are like shot.
He got that stuff, y'all. He got that stuff.
Oh, somebody! Oh, he needs some milk.
No, that's the last thing I need. But but I come to this conclusion. I have this opinion that life insurance companies utilized Index Universal Life to shift the risk from the insurance company to the insured. That was based on conversations I had with actuaries, high-level people, and it was based on my research, based on like, look at the patterns of people. So in this video, look at the patterns of companies, I mean. So in this video that he made of me, he basically says, Chris is wrong. He's lying. There's no way. He's absurd. It's ridiculous that this is the case. How do we even make this claim that whole life companies were creating IUL to shift the risk from them to the insured? He goes, because Mass Mutual doesn't even sell IUL. New York Life doesn't even sell IUL. Northwestern Mutual don't even sell IUL. So there's no way Chris could be right. That was his whole argument, right? And it's amazing to me how many people just like a dog at his feet just lapped it up. Like, oh, this is just gospel. Like if David says it, like it's got to be right, right? And so it's interesting. Like, I mean, Jake, let's take it away from insurance for a second, right? Have you ever seen any businesses, like any industries, where there's a good idea and a lot of companies adopt it, but not every company adopts the idea?
Yeah,
of course, right?
If it doesn't make sense to, what their end goal is, or the strategy doesn't make financial sense to take that risk.
If it doesn't make financial sense, or if it's not in alignment with their culture, right? Stuff of that nature, right? So his comment about Mass, New York Life, and Northwestern Mutual, like, I'm not a big fan of Northwestern Mutual, but like New York Life and Mass, like, hey, I mean, they're all good companies. They're all good enough companies, right? Like, and they all have mutual structuring and all this stuff. My response to him is like, that's a reason those companies are great, right? Because they had clarity on what their culture is and what their mission was and what they actually stood for. And so they didn't cave. They didn't cower to the financial pressures that a lot of the other companies did. Actually, while we do this, I want to bring something up. I got something on my board.
He going to the board. Hey, what's going on, Alonzo?
I got something on the board that I want to share. It's not that I don't like Northwestern Mutual. I don't like the training and the lack of training by Northwestern Mutual for their agents. And they kind of have too much of a cult vibe.
And when he says training, he's talking more so about industry, product, those things. They teach you how to sell. For sure.
Yeah. But I'm talking about like really understanding what you're selling and understanding how to do policy design. All right, so you guys ready for an education for a second?
Come on,
and
teacher.
I'm gonna debunk his debunking of me, right? In like 3 minutes. So David McKnight says that I'm wrong. Whole life insurance companies did not do this. They didn't create IULs, or like they didn't become more popularized and implemented as a way to shift the risk from the insurance company to the insured, because Northwestern Mutual, Mass, and New York Life didn't do it, right? That's his stance. Okay, right. So it's important to go back, right? Like, so when we look at the industry right now, right, the IUL industry, there's about 70 companies, give or take a couple, depending on the month that we're talking, right, that are selling index universal life. Back in 2009 through 11, there was like 14 companies. That's it. Okay. And that's actually 2011. So in 2009, I don't even know the numbers, but when we go back to it, these are companies. Can you see this? Okay.
Yep. John Hancock, Prudential, Minnesota Life.
Started selling IUL, demutualized 1999. They were a mutual held company that shifted to a stock company, started selling IUL.
Stop, professor. Yeah, I got to do this for y'all.
Your audio went away.
Okay, hold on. Hold on one second. Run this back.
What happened?
Ooh. Hold on.
Guys, we lost him.
Okay, I'm back. Can you hear me?
Nope. Nothing.
Can you hear me? You can't hear me? Can you hear me?
What the heck happened?
I can hear me. You can't
Can you hear me?
Yeah.
You can. Yeah, man. You can hear Jake? You can hear Jake? I can't hear Jake. That's weird.
They said that they can hear both of us.
It's on my end. I don't know what the deal is here. Let me see if something on my end happened. That's so strange. That's annoying.
Yeah, he was about to get into it.
Output built in.
He was about to get into it.
It should be working. I don't understand what the deal is.
I can hear you. Can you hear me? Hear you?
I don't know why I can't hear you. That's frustrating. Here, let me try to put my headphones on. Hold on one second. Maybe that'll work. If I do that, let me bounce around. See what I can do.
I can hear you hearing us together.
Oh, wow. No, we're good now. We're good. I got you. I don't know what happened. Okay, go ahead.
They hacking your computer.
Yes, they are.
So wait a minute. Y'all, because I got to stop him because he'll get in this professor mode and I got to pull him back to make sure we get some understanding. What does demutualization mean? What does it mean to be a mutual company and then go to you're not a mutual company? And why is that important for us to know?
Yeah, so there's two types of insurance companies. There's mutual companies and there's stock companies. Stock companies, if you think about it, when you're a stock company, you have shares of a stock and it's a profitable company. And the responsibility financially of a stock company is to the shareholders of the company. So they have to make sure that the company remains profitable to pay dividends to the shareholders, to pay a profit and get growth for the shareholders, right? That is the purpose of a stock company. With a mutually held whole life insurance company, more importantly, because there are mutually held companies and then there are participating mutually held companies, right? So once they become a participating mutually held company, now you as the policy holder actually participate in the profitability of the company through the payment of a dividend in the whole life insurance policy. And that is why, if you're talking to Jake or I or anybody on our teams, they're only going to recommend that you buy a banking policy with a participating mutually held life insurance company.
Got it.
Cool.
Yeah.
So am I saying they no longer have participating policies? Well, let me get there, right? So in 1999, John Hancock demutualized and stopped being a mutual company. They transitioned. Demutualization means they transferred from a mutual company to a stock company. They went through the demutualization process. So now they were beholden not to the policyholders, but to the shareholders of the company.
Got it.
Fair enough? Okay. So John Hancock was mutual, went Demutualized, 1999.
Like credit union and banks.
Yeah. And a lot of these other big financial firms are stock companies, right?
Yep.
Prudential was one of the biggest mutual companies, demutualized in 2001. One of the bigger players early in the IUL space. Minnesota Life, always a top 3 company in the IUL space early, demutualized 2005. Anybody seeing a pattern here? But I'm wrong, right? Somehow, because New York Life, Northwestern Mutual, Mass Mutual didn't do this, like it's not true, right?
They said if you study your past, you can catch the future.
Yeah, exactly.
He studied patterns.
Yeah, so he writes for Pru and MetLife. So MetLife, guess what? MetLife was mutual until 2001. They demutualized. Big time. National Life Group is still a mutual held company, but they are the largest IUL company. That's who I used to work with, right? They're still a mutual structured company. So the thing is now, if you have an IUL with National Life Group, that IUL is just a profit center to support all their other products like annuities and whole life insurance that they have guarantees behind, right? Like,
so let me ask you this question, because this is a question I feel like a lot of people would like to know, because there's not a lot of people that can explain it to the extent that you and I could. So I like when you do it. If the indexing strategy for the IUL is so magnificent in the way that it functions, why don't they use the exact same strategy for the annuity?
Well, so here's the deal. The annuity, they use the same strategy, but they have different expectations.
Yeah, that's what I mean. The expectation. Yeah.
So check it out. Like if a cap rate, like if you go to like, I don't know, any of these companies, National Life Group, and you go to their IUL, it's probably got like an 8.5% cap rate. If you go to their correlating fixed indexed annuity, they probably have a 4.5% cap rate. I don't know. I'm throwing kind of random numbers out there. We'll have to like fact check exact numbers. But it's a lot less. It's a lot less. And so the question is, why is that? Why would the same indexing strategy get a smaller cap rate on an annuity versus an index universal life product? And the answer is
drastic difference.
Yeah, huge. And the answer is simple, is because there's the surrender charges and the fact that they need to meet guarantees. IULs currently, whatever they are, whatever their cap rate is, they have surrender periods and they have all these other ways and moving parts in the policy that they control the results, right? They can control your access to that money and they can control what happens long term. With an annuity, they need to guarantee you right out of the gate, and they have income riders and they have all these different things that they have to make sure that they guarantee. So they have to make sure the numbers are realistic, that they can actually meet the promises. Because remember, in an IUL, the only promise the insurance company has to meet is the guarantee. Now, I'm not saying that every company is going to just lean on the guaranteed column, because I don't think they will. I don't think it's that bad. But in an IUL or in a fixed indexed annuity, whatever you get, they have to meet those promises. They have to. And so they're going to show you the numbers that show what they can actually do to meet those numbers. So if you want to figure out what's reasonable for an IUL, go look at the cap rates for the correlated indexed annuity with that company with the same index strategy that they're using, because they all do it, and then run your IUL policy with the expectations of those cap rates and see how it goes, because that's ultimately long-term what it's going to come into.
So why are they calling you out in these YouTube streets? Well, what's going on with what's going on with the difference in thought process, and why do you and why
why are they coming after me?
Why are the IUL gangbangers coming after the concept that we teach, especially with the concept that we teach actually protects the client in a much more extreme way?
Well, they think it's just about arbitrage, right? Like IULs are sold on this idea of upside potential, downside protection.
Right.
They're sold on the idea that you could borrow at a low rate and earn a higher rate. So we call that arbitrage. If you can borrow money from your IUL at 4%, let's say, and earn 6.5%, well, you got 2.5% of arbitrage there. That's obviously, that illustrates really sexy, right? That looks really good. The thing is, with regulation AG 49A, life insurance agents are able to illustrate policies in IULs that bake in positive 50 basis points of arbitrage. And so when you look at that, that looks really nice. Now, one of the things I'm excited, I'm actually going to be interviewing Bobby Samuelson tomorrow, and we're going over some of the regulatory updates, right? And it's going to be awesome. And so with that, some of the things that are happening right now, the regulators are changing. Is regulation AG 49A is going to be updated in 2023. And they are going to reduce the ability for you to illustrate high income levels. Like income illustrations in IULs are going to be reduced by up to 50%. Why do you think that is? It's because they haven't performed the way that they've been sold.
Okay. Don't do it.
And they're also eliminating the ability to illustrate positive arbitrage in IULs because it's simply not realistic.
Pretty much what he's stating, that the IULs, as they currently are, hadn't had enough time for it to actually be withered down, broken down, tested to be put to the actual rates or numbers that it will be. So anytime any new product is put into the market and the regulators have to trust that that product can do what is being shown. And then as more results come out, more proof come out, the regulators start to begin to regulate what getting the product down to what its real rate is. And so, you know, IUL is still a baby in comparison to the other financial products that are out here, that are still out here kicking, and those products still get regulated as more data comes out to ensure the consumer from making bad choices financially. But all of these, this whole concept matters because, as you told me, Chris, Mass Mutual, like, yo, it's so bad out here in these life insurance streets that everybody lying. We're disowning the concept of banking or infinite banking or private banking. What are your thoughts on that?
Yeah, well, I think it's like anything else. A couple bad apples ruin it for everybody, right? And so, the concept of infinite banking, privatized banking, utilizing, which is ultimately, let's keep it straightforward. It's more about your behavior with the policies and how you act. But the best asset in the world to utilize it with is a properly designed high cash value life insurance policy, right? And so from that perspective, I think it's interesting because Mass Mutual has been a leader in the industry at creating products that fit the model for high early cash. They're the only company that has a HEC V policy that's named high early cash value. Now they're saying, hey, you can buy it from us. You just, we just can't use it. Or like if you sell it. And so here's the deal. From a contractual perspective, a policyholder has all the rights in the world. That's a beautiful thing about a whole life policy. The insurance company can't tell you once you have the policy that you can't have it, you can't access it, whatever. It's your money, it's your rights. You're in control. That's one of the reasons.
And that's the piece. That's the biggest piece, especially when it comes to this banking concept. You will hear me and Chris say this every single podcast. Okay, every single episode. What we're going to say is the policy itself is not the banking concept. It's a part of a system of what we call the banking concept and the banking system, which is not a one size fit all. So it just depends on what your cash flow multipliers are in order for your banking system to work the way that it should. What it is like a cash warehouse, and it's the safest place to stash your cash until you have a play that is a better or bigger play than the guarantees that you're getting at the warehouse. So it makes you a more prudent financial steward over the assets and the capital that God has given you. That's what that policy is, and that's why we use it the way that we do. It is not a banking policy.
And to add on to that, I would say this, like everything he just said is like spot on. And why I love this is that by utilizing a banking policy as the foundational asset in your life that everything else flows through, right? By doing that, it forces you to become a better investor. It forces you to filter things through your life in a different way. That forces you to grow in the way you handle money, the way you make your decisions. And that ultimately, in the long run, you can't calculate a return on investment for that. You can't calculate the value behind that. And so, you know, if everybody got out of the mindset of being like, oh, I just want to try to get this big rate of return on every dollar that I ever put, and just focused on financial structure and setting themselves up to be ready for opportunity and to growing and being willing to go slow so that you can go fast, then, you know, that it'd be a different world. So, you know, I think kind of going back to your question though, like Mass Mutual, they had to do something, I think. You know, I think unfortunately, a lot of the concept of infinite banking, the basic understanding of it is that it's just positive arbitrage. Borrow at a low rate, go with a high rate. That's why a lot of people are out there saying you can only do infinite banking with non-direct recognition companies, which it could be better, it could be cleaner than it is otherwise, like with a direct recognition. But the bottom line is it doesn't need to be non-direct recognition. And the reason that the non-direct recognition conversation is dangerous is because you got a lot of people out there, IUL agents and whole life agents alike, talking about the fact is that, or the myth, the lie, that infinite banking is all about positive arbitrage. If you can borrow at 4% and earn 5% dividend, then you're winning. Or if you could borrow at 5% and earn a 6% or 5.75% dividend, you're winning. Well, just know that the posted dividend rate from a declared dividend rate from any company is not a net rate. That's a gross rate. Then you have to back out all the charges, the cost of insurance, fees, expenses. And, you know, long-term internal rate of a return of a policy is going to be between 4 and 4.5% in today's environment. Now, if rates keep going up, there's a chance that the policies will start to perform better, but nobody has a crystal ball. We don't know what's going to happen. So
I think, again, when you're teaching the concept of private banking or infinite banking from a stance of this is the life that you live, not a marketing tool that I'm selling to make insurance commissions. No, this is the life that I live because I actually believe in the concept, whether I'm licensed in the industry or not. This is the function of it. And the function is, in simplest form, uninterrupted compound interest. Very simple. In the most guaranteed, safest environments. The reason why I love dumping cash with insurance reserves and insurance policies with insurance companies are simply because of the contract. The contract. I want to do business and be in business with somebody that's willing to sign a contract that we both can come to terms and agree with. And what most clients don't know or understand it are that you can negotiate with the insurance carrier when you're trying to determine what your policy looks like. That is called a mutual benefit. So when I sign this contract, now there's an obligation that the principal of my capital that is shown to me on that illustration will be there when I need it, when I want it, no questions asked. You cannot get that same contract in the majority of investments out here, which lets you know that that is now no place you want to start your banking system with. It's like starting a banking system with an engine from 1927 trying to, you know, be in a 2022 Charger. Like you may get a little, but that thing is not going to keep going. You got to have a battery that you can depend on no matter what, rain, sleet, or snow. You know that thing finna go. That's exactly what you need. And so when you're talking about where you're protecting your capital, where you're storing your cash, where you're hoarding or not hoarding, or you're placing your money until you have a more superior investment strategy, there's no better place. Because why? Majority of people make terrible investing decisions because they're trying to figure out how to quickly flip money. But if I know every year I'm getting 4 to 7% on my money, guaranteed every year. I can now make a decision that says, is the money that I'm investing going to be a better reward than a guarantee 4 to 6? If the answer is no, I need to keep my money here until I know for sure.
Yeah. So, but the question is, so like I always kind of tell people, it's like, stop thinking of it as an investment. It's just start thinking about like financial structure. And when it comes down, to it, sorry, I got to deal with something. I got an agent that's asking for something. But when it comes down to it, like what really is important is like, you have to think about what's important to you. Is your money in alignment with your values and beliefs? Do you believe that you need safe money in an emergency fund, in an opportunity fund, for operating capital, for, setting it up for real estate investing or buying businesses, flipping it? Like, if you believe that, what's the next question? Where am I going to keep my money that I need liquid, accessible, and guaranteed? Right? And
liquid, accessible, and guaranteed.
Boom. Right? So that's the question, right? But it doesn't matter. I could talk to you until you're blue in the face about like all the benefits. But the first things first is like, what are your values? What do you believe? What do you want? What are your objectives? What are you trying to accomplish? What are the problems in you getting there? And what are you doing with your money to do that? And the problem that I see, because I deal with a lot of more conservative people, more entrepreneurial type minded people that just want to have full control of what's going on in their life, and the problem is that those people, their money is out of alignment with their values and beliefs. Right. And I go, hey, what do you want? Like, I want to build a business. I want to invest in real estate, whatever. All right. Where's all your money? In my 401k, in my IRA. Why? I don't know. Somebody just told me to do it. That's the problem. So you got to take a step backwards and you got to say, hey, what's important to me? What am I trying to accomplish? What are my values? What are my beliefs? What am I trying to accomplish? What do I want my life to look like 5, 10, 15, 20 years from now? What is the path that I'm currently on right now to accomplish that said goal? And is it in alignment? And the answer, if no, what do I have to do to pivot? What do I have to do to change things? How do I have to start strategically shifting my asset allocations to be more in alignment with my values and beliefs? And I'm telling you, as soon as you align your money with your values and beliefs, you will become more successful. You will be, because the human brain only allows you to put 100% of effort into something that you believe with 100% certainty you will be successful with. So if subconsciously you're freaking out about the government and you're worried about taxes and you're like, you think that the government's horrible, kind of like I do, right? And if you believe that, yet all your money's in a qualified account, well, what are you going to do? Right? Like you're now, your money is out of alignment with your values and beliefs. So your subconscious is not going to allow you to do what you need to do. I believe that's why most people are like, well, crap, no matter what I do right now, the only options are this. I don't believe it's going to work. So I might as well just party it up and live it up while I can. I'll deal with my retirement 30 years from now.
I'll put it to you like this. I'm going to ask you a question. I'm going to answer it first. I'm going to ask it the same thing to you. And then I'm going to give my explanation. Okay.
Sure.
And in my culture, the staple and anchor of any Black family is the grandma.
Okay.
And the reason why it's grandma is because grandma not moving. Grandma gonna be in the same place. Grandma got the same number. Grandma got the same address. Grandma go to the same church. Grandma wear the same clothes. Grandma got the same friends. Grandma got the same habits. Grandma is grandma, and grandma is safe. That's why in the Black community, our grandma is the anchor. What about you all?
I would say the grandparents. Like I wouldn't necessarily say grandma, but like for us, it's both. I would say it's probably not as clean, in my family, but it's definitely like the grandparents.
Grandparents. Right? Okay. Boom.
Grandparents. Yeah.
Here's why. The reason why is because you can go out here and try all these risks in the world. You can get your house burned down. You can get robbed. You can get you can lose your car. You can go through a repossession. You could fly out there to Italy without any regard, lose your money. But grandma and your grandparents gonna be reliable. You can call them at any time. Yep. And they got what it takes to bail you out. Let me tell everybody this. The true concept of banking is anytime money.
Y'all need to pay attention.
Pay attention. That was my baby. She said that. See, the true concept of banking ain't all that other stuff. It's grandma.
That's
It's
awesome.
your grandparents. It's that strong, steady, and it's that you're not gonna understand it until you get around their age and everything that they were telling you was right. Yeah,
Amen.
it's
Amen.
it's that. So when you talk about that banking concept, that IUL, it's like a rendition of today's grandparents. They want a vacation as much as the children. But that old school grandparent, that grandma, that if you lost everything, you can come back to, and it's gonna be functioning and moving, and she cooking dinner every day and breakfast every morning and lunch if you need it. She got a place for you. That's what true banking is, and that's what that permanent policy is able to provide for somebody inside their banking system. That's grandma.
Grandma's pretty smart. You know, they've seen, you know, one of the worst parts, I think one of the hardest things I ever went through is my grandfather was like my hero, and he died when I was 18. Right. And so that was tough, but like, you know, he definitely, he was that for me. And like, he was kind of like the guy I would go to with everything. And they just have this wisdom where it's like, nothing's emergency, nothing's a crisis. They've been through it. They've lived it. They've survived. Like, you know, you can get through it. Right. So it's like, you know, you just lean on them and they see it. And to that point, like IULs are like this new flashy thing where it's like, hey, you know, it looks really sexy. It looks really good. Like I remember my wife and I, when we bought our first house in 2004, and we were so excited, right? Like we buy it. I go to my father-in-law, and this is like, he was, you know, I hate to admit he was right in this, but like I went to him and I'm like, dude, we're going to be rich. Like, look at the housing market. And he's like, yeah, but this isn't normal. Like, don't expect this to last forever. It's going to be a bubble and blah, blah, blah. And I'm like, no, you don't get it. Like all the people I know are like crushing it and it's just going amazing. And like, they're driving Porsches and I'm 24 years old. Right. So I'm like, they're just like crushing life and like, whatever. You just don't get what it's like out here. And he's like, no, Chris, like, all right. Like, I wish you the best of luck, but like, you know, I don't think it's going to work. And of course, you know, 3.5 years later, everything falls off a cliff and he was 100% right. And so some things take a little longer. Some things take a little longer to play out, but like, you know, that was a tough piece of humble pie to swallow at that point in time. Christina, what's up, Christine?
So bro, this goes right back to the point. This goes right back to the point, bro. Yeah. And the biggest point is this. Your grandparents don't have the flashy. It's not the newest or the coolest thing.
Yeah.
But the one thing your grandparents have is a policy on every single human being that came from their DNA strand. They got a bank account, a safe, a closet full of cash, more than your fancy butt got. They live within their means. They travel or they go where they want. They got enough money to bail everybody out. That is a bank, family.
Why is that, right? Let's talk about why. Why is that? I want to hear you talk about it. Why do you think that is?
It's just simply because, one, I truly believe with our grandparents, they grew up in a time where all of this other stuff wasn't even accessible. It wasn't a thing. It wasn't like, it wasn't so easily. So they got comfortable in the true reality of what's really important. Family, this and that. They've, you know, the baby boomers and the ones before then were the ones that went and, you know, cut the gas and then started wanting to do their own thing. And then they all end up coming back to the same country town that they started from, wanting to wind everything down and get back acclimated to Bobby Joe and Bobo up the street. So when it comes back down to it, and what does every wealthy person typically want to do after they've done all the climbing? They scale it all the way down to what really matters. They get out those mansions because they tired of letting people come and having reasons to keep people. They get rid of all their luxurious stuff and they want to be isolated from people. And those are the people that typically live the longest. So what they, to me, to me, what matters to them is a simple life that they want to live, not trying to prove it to anyone else.
Totally. And I'd add to it. It's just like to break it down really simply, guys, they've seen some stuff go down in their life, right? Like they've seen the ups, they've seen the downs. They've probably seen the ups 3 or 4 times, and they've seen the downs 3 or 4 times, right? Like you take my father-in-law, right? Like, you know, he's 75, right? And he was born in 1947. And so you look at that and it's like, all right, what has he experienced? He's experienced a lot of ups and downs, like the gas lines in the 70s, the 60s, the 80s, the booming, you know, the Black Friday in 1987, like the crazy inflationary times, the dot-com bubble, like the housing bubble, like all the things, the good, the bad, the ugly, they've seen
People
it.
going to jail.
What's that?
Financiers going to jail, investors.
Right?
Yeah, all that.
And so it's just like they've seen it all. And so they know, like I think that's maturity, right? Like don't get too high and don't get too low. Don't let the highs be too high and don't let the lows be too low. And to me, that's where, you know, this comes in as a foundational compass, right? Where you can, like, if you utilize whole life insurance as a foundational asset, it's kind of a compass that can guide you in making these decisions. It builds this foundation that protects you in the down times and positions it as opportunity, you know, for moving forward, you know, like for as times are challenging and good, you know, it just opens it up.
You know what it reminds me of, Chris? It reminds me of King Solomon, right? When he was popping, King Solomon was popping his collar, gold everywhere. You got this, get some rude. Here go, you want some lemurs? Here goes some lemurs. Oh, you want a zebra? Here go a zebra. Oh, you want the oil? You know, King Solomon was popping.
He's like the Oprah.
And then when he started, you get a car. But when he got older and more wiser, he's like, I had it all.
Yeah.
And it all still means nothing. And so that's in Ecclesiastes. And so when you're in Ecclesiastes and you're hearing the satire come from King Solomon, that's from a wiser man that says, don't get caught up in those things. Slow down. It all matters not. They all are the same. Grass isn't greener on the other side. Live a much slower life, which is a longer, healthier life, because you're not so stressed trying to make things happen that don't fit.
Amen. I love it, man. I love it. So man, I mean, where to even go? Like at the end of the day, I'm looking at this and, like, to me, the big stuff is like, all right, I got this David McKnight stuff. Anybody that's interested in seeing the rebuttal to that, I'm going to put together a really formal, organized video that's just going to eviscerate his video, quite frankly. I'm going to also be doing,
I'm going to do a reaction.
Yeah, you will. Yeah, you will. And then I'm also going to do videos now breaking down and doing an evaluation of his 2 books. And I'm going to go through his videos and I'm going to do reaction videos to his videos. He picked a fight with the wrong guy. That's all I'm going to say. Because now I'm just going to, you know.
So will the simplest thing for him to do, will it be for him to reach out and say, yo, let's just do a debate live?
Yeah, that's the only way I stop at this point in time is a debate. Debate me live, streamed live on all of our platforms, live. Like, here's the thing. Like, listen.
I don't need you cutting, editing, nothing.
Nothing, no cut, no editing. If you know your stuff, if you know your product, if you're that confident and you believe in what you're doing, this should be, if I'm wrong, this should be your opportunity, David, to put me in my place. So bring it. Do it. Yeah. I'll bring my video guy. I'll fly to Puerto Rico or wherever you live. I'll swing by and check out my development in the Dominican on the way. We'll do that. And so we'll do that. I'll bring my video guy.
On the way.
We'll stream it live. And there's not gonna be any preparing. There's not gonna, I mean, you can prepare all you want, but you better be ready to answer real questions live on the fly with 100% transparency about all this. And you know what? Maybe we get to the end of that. We realize we have more in common than we thought. Maybe we get to the end of that. And I realize you're one of the good guys on the IUL side, because there are some that do it the right way. Maybe that's him. I don't know.
Okay, so this do it the right way. Now the next episode we're gonna have to break down this do it the right way you just threw in there. The IUL is good.
Well,
if you do it the right way.
No. Oh,
That's what you said. That's what you said.
Don't mix my words. Don't mix my words.
Y'all, press number one in the chat. Press number one in the chat if you heard Chris say that.
No. I did not.
In the chat if you heard Chris say. He said, "I got some good IUL guys over there, and it does work the right way." I said, "Whoa."
So he could be one of the good guys, meaning he's trying to do it right as you possibly can. I will say this. If you design an IUL properly and you fund it properly and you have the right expectations, you'll probably never run into a problem with it lapsing, right? You're never going to run out of the insurance component of it. But it goes until you start taking policy loans from it in retirement, then all bets are off, right? Like then it's
so he's pretty much saying that it'll be great if no one touches it.
Yeah, no, IULs are not, they're the most misunderstood, misrepresented product in the world, right? In the financial world, right? So at retirement, like if people go to use them for income, which is why they're sold, well, then that's a problem, which I know.
So the best thing to do, just need to, this is what I told people they could do, especially earlier when I started teaching. I said, if you want the risks of the IUL, that's just what you want. If the client want what the client wants it. So if you write the policy and you ride it out and you ever want to do a 1035, you could 1035 out the situation where you got all the good and you scraped out right before you saw the bad. But here's the deal. You would literally have to be an economist to be able to weather that storm. And you got to be able to have that book from back in time where you can just open up and figure out what happens. And then that's probably an option that you have.
Well, you know, to kind of stack onto a point that you made earlier about annuities and the rates and stuff like that, it's like it's kind of laughable. All these people, as friends don't sell friends IUL. That is maybe one of the best. I'm gonna make a t-shirt. I'm making that into a t-shirt, man. I'm gonna send you a free copy of one because that is awesome. But
that's a capitalist.
The funny thing is if you look at an IUL and you look at the income distribution, everybody tries to tout these, like Curtis Ray is one of these guys with MPI that tries to tout IUL as being this great income distribution vehicle. I see your face every time I call somebody out. You just laugh. But he makes it sound like these IULs are these amazing income distribution vehicles. And he's like, 401ks are not great for income distribution. IULs are amazing. No, guess what are amazing? Annuities. That's what they're designed for, income distribution. So in what world do you think that an IUL, after all the fees and expenses and risks and loan costs and all these things, are going to compete with an annuity, which oftentimes an IUL illustration makes them look pretty competitive to an annuity? And it just doesn't make any sense.
I just want somebody that call my boy out, set the time and the date. I'm going to be the ref.
I'll be there. I'll be there. You tell me, like, literally anybody, and I'm going to make this open to anybody. So if anybody's watching this right now, I
got somebody for you.
If there is an IUL person that has more than 5,000 followers on any platform, I will debate them live. I will not do recorded stuff. I will not do a Zoom. I want to be sitting next to them. I want their body language. I want to know what's going on in their mind. I will fly to them.
Somebody! He needs some milk.
Hey, listen, I'm setting it up. I'm setting it up. Hey, listen, somebody may say, well, Jake, why don't you get in there? Listen, if I got Steph Curry, I'm going to be Draymond Green. I'm just going, here you go. I'm going to rebound for Chris. I'm going to be like, here you go. I finally met somebody that is my superior in the concept. I'm going to shut up. And some of y'all can learn that. You can learn that. When you find somebody better than you at what you know or what you do, shut up and just let them go. Okay.
No, you're great at what you do, man. Like, I just know the IUL space. Like, that's like, and I love my knowledge of the IUL space makes my passion for the whole life space that much more powerful. That's all it is.
Hey, listen, y'all. This is all for the Smoke Kings today. Listen. This is technically episode 1. We're gonna figure out what we're supposed to say, you know, right when we started and what we're gonna end it. It's gonna get a lot cleaner. But just know when it comes to this insurance, private banking, infinite banking, life stuff, dealing with the insurance sector, we want all of the smoke, not with people personally, unless they personally attacking, but with concepts that people teach, just to be able to give an imposing thought on that. What you say, Chris?
Yeah, no, I mean, that's it, man. I agree 100%. Like, I'm excited to do this every week. I think what I love about working with Jake, guys, is like having a relationship with a guy like him that can push you, that can, you know, we're gonna engage with each other, we're gonna push each other, we're gonna think critically about these situations, come from different perspectives. We both come from different backgrounds in life, and we have businesses. He's a crazy entrepreneur. I'm a crazy entrepreneur, real estate guy, and I'm just excited about, like, every single week bringing new perspectives to what's going on in the world, how it relates to things in a way that we can kind of cut through the smoke and bring clarity, at least from our perspectives. Maybe you don't agree with it, but, like, hey, that's what it's all about, right? And so I think it's going to be probably the highlight of my week is doing this show every week, because this is
be
like
lit. And it's going to be y'all, and it's going to be live. So
live.
none of that really foo cut crap stuff.
Right. We'll probably what it is. We'll probably put the recordings up on a podcast or whatever, but we're going to be live streaming. If you want to see it live, make sure you're following either at Jake Taylor on YouTube or at Life 180 on YouTube, and you can get in and see it.
This is going to be great, guys.
It's going to be awesome. So, all right, brother. Well, awesome. Guys, have a great day, and we'll see you next week.